Hi friends, Simit here from informedtrades.com. In this video, we're going to look at a strategy that depends largely upon the 200 exponential moving average. This strategy is something that was shared with us by Informed Trades community member DREBG. His real name's Dave, DREBG. So thanks to Dave for that. And if you have any questions about this, you can join us over at informedtrades.com. Thanks and enjoy.
Okay, on the screen right now you're seeing the chart shared with us by Dave, which he used to forecast the breakout. And that's sort of what we're going to look at in this video. On the right side of the screen on the chart, you'll see that big green candle. So we're going to look at how Dave was sort of able to see that candle coming and enter a trade and profit accordingly. This is a Australian dollar Swiss franc chart, 30-minute chart. Okay, the first thing that, or one thing that Dave often mentions is something that he really gives a lot of credence to and looks at closely, or pays attention to, is the 200 exponential moving average, basically, or used on all the time frames that he's watching. The 200 exponential moving average often acts as a very strong support resistance line. At least Dave has found that to be the case. So when we see that and we see the market approaching it, we can ask ourselves whether it will bounce off it, hit the support line and just come back down. Hit the resistance line and come back down. Or will it break out? And usually when you break a strong support resistance level, the breakout will be very substantial. Okay, now in terms of indications of of what's going on, one of the things we can look at is a moving average crossover. So we see before the breakout comes that the 8 exponential moving average is crossed above the 21 exponential moving average, which is one sign of momentum, a bullish indicator suggesting we may get a breakout. Okay, another thing that happens is we see the price actually spike up and break above the 200 exponential moving average before it comes back down. And this was something that another Informed Trades member, EK Trader, mentioned in a video he made about how to trade a breakout, is that when it breaks above, that often is not the best time to enter. Instead, what you want to wait for is the pullback. And that's what Dave did here. You know, the price broke above the 200 exponential moving average and then came back down. And when it came back down, that was the opportunity to enter at a better price. And that's so that's pretty much what happened. The price went up, came back down, and the order was entered. Okay, so now that we're in the order, or in the trade, the question is, where do we put our stop loss, or how much are we risking? A couple things we can look at here. One, we can place our stop loss below the moving averages, some of the moving averages that we're watching. And we can also draw a trend line and see where the stop loss should be placed in light of the trend line, often below the trend line, or use the trend line acting as a support or resistance level. So basically, by looking at price action, we can sort of get an idea of where we want to put our stop loss. Okay, and sure enough, it retested resistance at the 200 exponential moving average, and this time was the breakout. So this is another example of, you know, on the first breakout is not when to go in, but let it break out, wait for the pullback, and then the real breakout comes. Okay, so now the question is, where do we exit, or what is our target profit? Of course, this should always be decided upon in consideration with where the stop loss is. You want a favorable risk reward, meaning the upside is equal to or greater than the amount that you're risking. And we can also look at support and resistance levels, or where's the next resistance level, looking at multiple time frames. And when we have that, when we see where resistance level is, as well as where we can put our target profit in light of where the stop loss is, or in light of how much we're risking, we can get an idea of where to set the target. And that's pretty much it. If you have any questions or anything you'd like to add, you can always join us over at informedtrades.com. Thanks and enjoy.